This is the IUX Education Podcast, your shortcut to smarter trading and investing.
Where complex markets become simple.
Welcome back to the
Let's dive
We're
in.
glad you could join us. We're from the team here at IUX Education.
That's right. And our whole goal here is pretty simple, really.
Yeah, we want to give you that shortcut to being genuinely well-informed. We dig through stacks of sources, pull out the key stuff.
So you don't have to. Today, we're jumping into something really fascinating. Human psychology.
Specifically, how our own minds mess with our decisions, especially when money's on the line, in high-stakes situations.
Exactly. And for this deep dive, we're tackling this really intense internal fight. I think it trips up a lot of people in finance.
You mean the battle between the fear of missing out, FOMO,
Oh, right.
and its counterpart, the fear of losing money.
It's a constant tug of war, isn't it?
It really is. And our mission today, well, it's not just about understanding these feelings, which are incredibly powerful, by the way.
We want to give you actual tools, right? Practical things you can use.
Practical, actionable tools to help you manage that impulse, that knee-jerk reaction they always seem to trigger. Yeah, you know the feeling. Picture this. You're watching the market, maybe a currency pair you like.
Or stock, yeah.
And boom, it just takes off.
Yeah.
Climbing like crazy.
Your heart starts racing.
Totally. And that little voice pops up, screaming, "Get in, now! You're going to miss it!"
The FOMO voice.
But then, almost instantly, there's another voice. Quieter, maybe?
Yeah, the cautious one, whispering, hang on. What if it tanks the second you click buy?
What if you lose it all? That's the conflict right there.
That exact internal battle you just laid out, that clash between FOMO and the fear of losing, that is the root cause.
The root cause of what, exactly?
Of the single biggest enemy for most traders, impulse. Pure, raw impulse.
Okay, so our main aim today is helping people stop trading on impulse.
Precisely. It's not really about which fear is worse, FOMO or fear of loss. Frankly, they're both super potent.
It's more about seeing how both of them fuel those impulsive decisions, the ones that often sabotage our plans.
Exactly. The decisions that keep us from actually reaching our financial goals.
Okay, so let's break down FOMO first. It always feels like the louder one, the more aggressive fear.
It definitely does. Seems more in your face.
But what's really going on there? Psychologically, what's underneath just missing out?
Well, at its core, FOMO is basically an anxiety response. It's triggered by what you perceive as a golden opportunity slipping away.
Okay.
And it's tied into something really primal, our need for social proof. That little instinct that says, if everyone's doing it, it must be the right move.
Ah, the herd mentality.
Exactly. And in trading, following the herd without thinking, that can be, well, pretty disastrous.
Makes sense. So what usually lights the fuse? What are the common triggers that kick off that FOMO feeling?
Oh, there are a few really common ones these days. First up, probably the biggest, social media.
Right. Like Twitter, Reddit.
Yeah. You see those screenshots, right? Huge gains, people bragging about easy money. It's almost designed to make you feel left out.
Like you're missing the party.
Totally. Then you've got news headlines. Big, bold text yelling about record highs. Some asset going to the moon.
Pre-urgency.
For sure. And sometimes, believe it or not, the chart itself is the trigger. You see this long, strong green candle just shooting up.
It almost looks hypnotic.
It can be. It just screams, jump in, even if logically, based on your plan, there's absolutely no reason to enter right then.
So the trigger hits. What happens next? Can you walk us through that chain reaction? How does it actually lead to placing a bad trade? Is it like a predictable pattern?
Oh, absolutely. It's almost like clockwork. There's a pretty clear 5-step sequence that plays out.
Okay, step one.
Step 1, the trigger. Like we just talked about, maybe it's a tweet, 6YZ to the moon, lessest chance. You know the type.
Yep. Then what?
Step 2, the emotional hijack. This is key. Your logical brain just checks out. It gets flooded with these exciting images of quick profits, easy money.
And your trading plan.
Forgotten, completely gone. Your rules, your strategy, all that prep work, out the window. Your rational self is basically offline.
Wow. Okay, step 3.
Step 3, abandoning the plan. This is the critical failure point for discipline. You start telling yourself things like, yeah, okay, my entry rules aren't quite met, but look at it go. I can't wait. This is it.
Rationalizing.
Exactly. You rationalize throwing away all your careful planning. Convince yourself this time is different.
And that leads to?
Step 4, the reckless action. You slam that buy button, probably a big market order, no careful position sizing, maybe not even a clear stop loss in mind. You're not trading, you're chasing. Pure gambling, really.
Chasing the price, yeah.
And finally, step 5, almost inevitably, the painful result. You end up buying near the peak right when the early folks are selling. The market turns, often quickly, and bam, that impulsive trade turns into a nasty loss, often a significant one.
And that whole sequence, that's the definition of reactive emotional trading, not proactive, planned trading.
Couldn't have said it better. And the absolute first step, the most crucial thing to stop impulse trading, it's recognizing those triggers, understanding this whole destructive pattern. When you feel that powerful urge that I got to get an end at a lubium feeling.
You need to pause.
Yes, pause and identify it. See it for what it is, not some amazing opportunity, but a psychological trap. A very effective one, mind you.
Okay, so we've got FOMO, the pull to jump in. But what about the other side? The fear of losing money. It sounds, I don't know, more sensible, but you're saying it can be just as bad.
You're right, it does feel more sensible, like basic caution, but it can be incredibly paralyzing, maybe even more so sometimes.
How so?
Well, its power is actually documented. There's something called prospect theory. Basically, research shows the pain we feel from a loss is roughly twice as strong as the pleasure we get from an equal-sized gain.
Twice as strong. Wow.
Yeah. So that fear of pain makes us irrationally risk-averse. We avoid taking risks even when logic, or our plan, says we should.
That's really interesting. So what kind of things trigger this fear, the fear of loss?
Yeah.
Makes us freeze up or make bad calls?
Often these triggers are a bit more internal, less about outside noise like FOMO. A big one is having a major recent loss.
Oh, feeling gun-shy.
Exactly. You felt that pain, and now your brain's trying to overprotect you. Avoid any potential risk, even calculated ones.
Makes sense. What else? Trading with a really small account can do it too. Every potential loss feels huge, almost catastrophic. The pressure just ramps way up.
Yeah, I can see that.
And finally, just a general lack of confidence, either in your trading strategy or maybe even in yourself. It leads to constant second-guessing, hesitation, even when your plan gives a clear signal.
Okay, so FOMO drives impulsive action, but this fear of loss, seems like it drives impulsive inaction, right, or paralysis. How does that end up hurting your trading plan just as much?
Great question. It usually shows up in about 3 main ways. And yeah, they're all still forms of impulsive behavior, even the inaction.
Okay, like what?
First, there's what you just mentioned, impulsive inaction or hesitation. You see a perfect setup, checks every box on your trading plan checklist.
The ideal trade. Right, but the fear kicks in. You hesitate. You think, maybe I should wait for just one more confirmation. Or you want absolute 100% certainty, which never comes.
And by then,
the best entry price is long gone. You missed it. You impulsively decided not to follow your own plan because of fear. Missed profit.
Okay, that's one. What's the second?
Second is impulsive exits. This one's painful too. You're actually in a good trade. It's profitable, moving towards your target nicely.
I'm good so far.
But then there's a little dip, just normal market movement, a small pullback. But that fear of giving back the profit you have, even a tiny bit, it becomes overwhelming. So you impulsively slam the close button. You grab a tiny profit, maybe break even, but you miss out on the much bigger win your plan was aiming for.
Cutting winners short.
Yeah.
Classic.
Exactly. And third, this one might be the most dangerous impulse driven by fear.
Okay.
Holding a loser. It sounds paradoxical, right? Fear of loss makes you hold a losing trade.
How does that work?
Your trade hits your predefined stop loss. Your plan is crystal clear. Exit. Take the small managed loss. Protect your capital.
Right. That's what stops are for.
But the fear of realizing the loss, making it real on your statement, admitting you were wrong, it's just too painful for some people.
So they freeze.
They freeze, or worse, they hope. They impulsively hold on, praying it turns around. Maybe it'll come back. This is how small, acceptable losses turn into massive, account-damaging disasters.
Oof. Yeah. I think a lot of people listening might feel a little winds hearing that one. It's that refusal to just accept the loss, isn't it?
It's almost illogical. The numbers are screaming, get out! But the fear overrides the logic.
So, bottom line, whether you're chasing gains because of FOMO or frozen by the fear of loss.
Or holding losers too long.
Right. Both paths lead to impulsive emotional decisions that break your own rules.
Precisely. They're just different flavors of undisciplined trading. Different sides of the same bad coin.
To really stop trading on impulse, then you need to tackle both urges. The urge to jump in recklessly and the fear that makes you hesitate or cling to bad trades.
You got it. It's about seeing that these actions and the inactions are equally harmful to your results in the long run.
Okay, this all makes sense. But these emotions, FOMO, fear, they feel so baked in, so powerful. How do we actually do something about them?
Yeah, how do we break free? How do we build that discipline when it feels like our own brain is working against us sometimes?
It really does feel like an uphill battle.
It can, absolutely. But here's the encouraging part. It's not really about brute force willpower.
Oh, why not?
Because willpower is like a muscle. It gets tired. It runs out. Relying on it alone is tough. The smarter approach is building a better system.
A system. Oh, okay, tell me more.
I've got 4 really practical strategies that help create that system, things you can actually implement.
All right, strategy number 1.
Strategy 1, the pre-trade checklist. Sounds simple, maybe even basic, but it's incredibly effective.
What's involved?
You create a short checklist, physical paper or digital, doesn't matter. Just 3 to 5 simple questions based directly on your trading plan rules.
Can you give an example?
Sure, like 1, does this trade meet my specific entry signal? Yes or no? 2, is the potential reward at least twice the risk? Yes or no? 3, do I know exactly where my stop loss and take profit levels are before I enter? Yes or no?
Okay, simple questions.
Simple, but here's the rule. You are not allowed to take the trade unless you can honestly answer yes to every single question. No exception.
Ah, I see. What does that do?
It forces a pause. It injects a moment of pure logic right when emotions are usually trying to take over. It's like a circuit breaker for your impulsive feeling.
Circuit breaker for emotions. I like that. Okay, what's strategy 2?
Strategy 2, the if-then plan. This is about planning ahead for your emotional reaction.
How does that work?
You literally write down plans for specific emotional triggers. Like, if I start feeling strong FOMO because everyone online is hyping a stock, then I will close my charts and step away for 10 minutes.
Okay, or for the fear side.
Right, maybe. If I feel scared to take a trade that perfectly matches my plan, then I will execute it, but use only half my normal position size. This helps lower the perceived risk and gets you acting according to your plan.
So you're anticipating the emotion and already have a response ready.
Exactly. It builds confidence because you're not caught flat-footed when the feeling hits. You have a predefined, rational action to take. Reinforces good habits.
It sounds really powerful having that pre-planned response. What's strategy number 3?
Third, and this might be your most valuable tool over the long haul, the trading journal.
Okay, but most people log trades, right? Entry, exit, profit loss.
Yes, but that's not enough. You need to log your emotions for every trade. Be brutally honest.
Right.
Write down why you took the trade. Entered this because of FOMO, saw it spiking, or closed this winner way too early because I got scared of a small dip.
And the benefit of doing that.
When you go back and review your journal regularly, the patterns become undeniable. You'll see it plain as day. My impulsive trades consistently lose money. My planned, disciplined trades perform much better.
Ah, the data doesn't lie.
Exactly. It provides that crucial accountability. It's like tough love from your past trading self, showing you what works and what really, really doesn't. Essential for stopping impulse trading for good.
That self-awareness piece sounds key. Okay, and the 4th strategy. Does our trading environment matter?
Absolutely. Strategy 4 is about ensuring you have the right environment. This means using tools and platforms that actually support disciplined trading.
How so?
Well, for instance, using a platform like IUX, you can set very clear stop loss and take profit orders before you even enter the trade, and they execute automatically.
Takes the in-the-moment emotional decision out of it.
Precisely. It helps enforce your plan. And, crucially, a good platform should have a solid demo account.
For practice.
Yes. You can practice all these strategies, the checklist, the if-then planning, the emotional journaling in a completely risk-free environment. You get to experience the FOMO, feel the fear.
But without losing real money while you learn to manage it.
Exactly. You build your systematic defense, gain confidence in your process, all without financial consequence. These practical tools make building discipline much, much easier.
So when we boil it all down, it really seems like the whole FOMO versus fear of loss thing.
Yeah.
It's almost a sideshow.
In a way, yeah. It's a distraction. The real fight, the one that determines your success or failure,
Is between.
it's between your emotional, impulsive self and your disciplined, systematic self.
That makes a lot of sense.
FOMO and fear, they're just weapons your emotional side uses against your rational plan. The goal isn't to somehow become emotionless. It's impossible. We're human.
Right.
The goal is to become a trader who can feel those emotions, acknowledge them, say, okay, I feel FOMO right now, or, yep, feeling scared about this.
And then choose not to act on them impulsively.
Exactly. Choose to follow the system instead. That system we talked about, the checklist, the if-then plans, the journal, the right platform tools, That's your shield.
Those are the building blocks for discipline.
They absolutely are.
And ultimately, it's that discipline that connects the dots, isn't it?
Yeah.
It's the bridge between wanting success in trading and actually achieving consistent results.
Well said. It always comes back to that, doesn't it? Have a plan, trade the plan.
Have a plan, trade the plan. So, as you think about everything we've discussed today, here's a final thought to chew on.
Okay.
If your trading journal could actually talk back to you, what do you think it would say about all those times you ignored your plan? What uncomfortable truths might it reveal? And more importantly, what new insights could that bring to your very next trading decision?
That's a powerful question to consider.
Thank you so much for joining us for this deep dive.
Yeah, thanks for listening. And if you do want to follow along or, learn more, check out IUX Education.
We've got loads of learning materials, articles, other deep dives like this one, all designed for traders.
We hope it's helpful. We'll see you next time.
And this is the IUX Education Podcast, where trading confidence begins.
That's a wrap for today. This episode was brought to you by IUX Trading Platform, your trusted partner for smarter investing.